Is there CGT when inheriting a house? Next question is, what if it was my parents' home, their main residence? Should you give assets while you are still alive or leave them in your will? Things can blow up after someone passes away. An angry sibling decide to challenge the estate. Third question, does the government take my asset if I don't have a will? Does the government take my assets if my beneficiaries are overseas? Hi everyone, welcome back to the channel. Today we will discuss two certain things in life, death and taxes. We will explore what happens when someone dies, what taxes apply, how inheriting a house from your parent is treated for tax, and whether Australia should bring back inheritance tax. So let's get started. How does a deceased estate work in Australia? So when someone dies, everything they own, like properties, bank accounts, and personal items, will form their deceased estate. If the deceased had a will, it will tell what was the deceased wishes and how they want to distribute their estate. And if they don't have a will, then intestacy law will apply. It normally will first distribute to their surviving spouse and their adult children. And then if they don't have a spouse or children, it will go to their parents, their siblings, and distant relatives, and the list goes on. And this is just an example. There are variations between each state in Australia. The will also nominates a person to manage the deceased estate called an executor. The appointed executor needs to apply for probate from the court, and this is important step because the court will need to check if the will is valid. The executor has the right to act and manage the asset of the estate, and whether the asset belong to the deceased and valid for the distribution. After receiving the probate, the executor now can manage the estate. They pay outstanding debts, including funeral expense, loans, and taxes owed by the deceased. This money is taken out of their estate to settle these debts. So after the debts are settled, then the remaining asset can be distributed to their beneficiaries. So in Australia, what taxes apply when someone dies? Let's start with some good news. Australia doesn't have inheritance tax or estate duties. So if you inherit something from your parents or your grandparents, you don't have to pay any taxes for receiving it. And this is consistent with the general income rules because, for example, if you spend money to buy a property or buy shares, do you pay tax? Obviously no. As an acquirer, you don't pay tax. The one who disposes it is the one who is liable for tax. So, which in this case is the deceased estate because it passes the asset on to the beneficiary. It is considered a disposal. However, the Australian government is very generous. They say, death is hard enough. I won't make it any harder for you. So here's a rollover. No CGT on the asset passing to beneficiary. The only exception is if, for example, your parents give your sister $1 million share portfolio in their will, who is an US tax resident, then the deceased estate will have to pay CGT on it. But there is a way out of it, but which we can discuss in another session. And the effect of death also modifies cost base of asset. If your parents bought their house in the 80s for $15,000 pre-CGT and you inherit the house now worth $3 million, your cost base will be $3 million. So later on, if you sell it for $5 million, you will only need to pay tax on the $2 million gain. You also get a cost base uplift to market value if it was your parents' main residence. In other scenarios, you will just inherit your parents' cost base. For example, the same property, if it was their rental property and they bought it in 1999, then you would inherit the original cost base at $15,000. So if you sell it for $5 million down the track, then you pay on the gain between $50,000 cost base and $5 million market value. Basically, the government wants to crystallize the tax benefit of your parents. If they have tax-free tickets like pre-CGT, main resident, you get a cost base uplift but lose the tax-free ticket. That seems fair to me. Commonly asked questions about death, taxes, and inheritance that I often hear from. The first one is there CGT when inheriting a house? So no, as I explained, there is no CGT at the time of inheritance. But if you sell the property later, CGT may apply. Next question is, what if it was my parents' home, their main residence? Then again, no taxes at the time you receive. You might get a full main resident exemption even when you sell it, if you sell it within 2 years from the day of death, or you move in and live in a home yourself. Third question, does the government take my asset if I don't have a will? This is actually a question from my friend just a few days ago. She heard another accountant told her, she asked, watch this TikTok. The government will take your asset if you don't have a will. So just to clarify, no, the government is not there to steal anyone's asset. They won't take over your asset. Intestacy law will apply. They will assign you an administrator, same role as an executor, and they will work through the law and distribute to your spouse, your children, and goes on. Last one, does the government take my assets if my beneficiaries are overseas? So, same question for my friend. The answer is no. The estate will be administered according to the law, and the government is not there to steal your money. They are there to perform the law regardless of the beneficiary residency. Even if they live overseas, they will find that person and give the asset to the person. Next one, gifting and inheriting. What's better? Alright, let's talk about something that comes up a lot in family. Should you gift assets while you are still alive or leave them in your will? There are taxes and legal differences between gifting and inheritance. If you give something while you are still alive, the transfer will trigger CGT regardless if you receive money for it. And as you already know, if you leave that same property in the will, the CGT asset is generally deferred. So, inheritance is much better from a tax point of view. But people do things not only because of tax. Some families choose to give assets before death because it keeps things simple and avoid potential conflicts later on, especially when they know their children don't get along very well. They don't want to leave anything to a particular person, or there's a blended family involved. So early gifting can set a clear expectation and make sure no surprise coming up later. And because things can blow up after someone passes away, for example, an angry sibling decides to challenge the estate, the executor still has to deal with the court, legal fees, and no one really wins in that situation, except for the lawyers. And some lawyers can offer no-win, no-fee deals, so the fight can go on for years. The emotional and financial toll can be huge. So what's better, gifting now or gifting later, depends on your situation and your family dynamics. And the last one, what's Australian position on inheritance tax? Right now, Australia does not have inheritance tax. However, up until 1979, Australia had estate duties or probate duties. But the government just decided to abolish it. This is very unique compared to other rich countries, especially if you compare to other common law countries like UK, US, Canada. where there are death-related taxes or duties. And they do it not because they are mean, but because it is important to close the gap between the rich and the poor. According to ABS and NAP data, the top 10% of Australia now own 44% of national wealth. Over the next decade, it will increase to 50% and surely continue to increase further. As you know, the diagram of wealth growth is like this, right? If you are in the 90% group, you grow your wealth at this speed. However, the wealthy, they grow at this speed. So the gap will keep increasing and increasing. Imagine if a billionaire can transfer their wealth tax-free for generations. With an aging population like Australia, smaller and smaller group of people will have control over and more majority wealth of the country. In one of my tax advice, I have seen that situation. So this lady, she inherited a property from her parents in the early 90s, and it is a big property near Craigieburn. And in her will, she passed it on to her nephew, and at that time it's worth $9 million. The whole process tax-free. So just one of the demonstrations. So in my opinion, Australia should definitely reintroduce inheritance tax. And if you are not interested in this opinion, hear me out. How's about we have a cap like US? Just impose inheritance tax on estate that is bigger than $20 million. That seems fair, right? So what do you think? Comment below if you think Australia should reintroduce an inheritance tax or not. If you find this helpful, please hit the like and subscribe for more content on Australian tax law. Don't forget to subscribe. I'm Hannah, the tax advisor you can trust. And thank you for watching.